Hi, everyone, and welcome back to the weekly MMA Cycles Market Update. Today is Wednesday, September 10th, 2025. I'm Gianni Di Poce, your host, but we are joined this week by the man, the myth, the legend, Ray Merriman. Ray, how's it going?
It's going great, Johnny. It's great to see you again and be with you here.
Likewise, it's been, in my opinion, too long since we've had you back on, but with MMTA starting up in a couple of weeks, we've been very busy here on the MMA side of things. Plus, you got a couple webinars coming up. We'll talk about that later, but a lot of things happening in this world right now. Stocks are at all-time highs. We just had an inflation report today that came in slightly below estimates. We had 900,000 jobs thrown out the window that supposedly vanished and never existed. So where do you see us going from here? Let me go ahead and share my screen and look at the Dow here. What are you looking at when it comes to geocosmics, when it comes to stocks right now? Because there's a lot of moving parts.
Well, I'm moving more into the phase of my life of long-term analysis. Um, and so I'm looking at a long-term cycle that I think is very, very important that's starting right now. And I know you got a daily chart up there, but I want to talk about the long term for a moment here. If you got a monthly chart, maybe we could look at that.
Yeah, here we are.
Um, So the cycle I'm referring to is the nodal cycle, the lunar nodal cycle, and its correlation to long-term cycle lows with the US stock market, but really it affects a lot of world stock indices. And so this cycle is in effect when the North Node reaches 18 degrees of Pisces, which is right now, we're entering 18 degrees of Pisces on the North Node. And from this point through 29 degrees of Capricorn, which will be April of 2028, has an abnormally high correlation with that type of a range to long-term cycle lows in the US stock market. Now, long-term means 6-year, 9-year, 18-year. The last time it happened, just happened to be March of 2008. I think you can see that way down at the bottom beginning of your chart. And you can go back and look at all those times of 18 Pisces to 29 Capricorn, and you'll see that there's an awful lot of these 6-year, 9-year, and 18-year cycle bottoms. Now, if you expand that out even to, into Sagittarius, even into Scorpio, you capture even more of these long-term bottoms. But there's so many in this tight band of 3 to 4 years that goes between now and April 2028 that we got to pay attention. And not only because the North Node is going through 18 Pisces to 29 Capricorn, but it overlaps the Jupiter cycle that has a
Mm.
high correlation to long-term cyclical lows. And that's Jupiter in Leo and Virgo. And that'll be in effect from mid 2026 to mid 2028. So you can see from, say, mid 2026, about April 2028, somewhere in there, um, the world economy, world equity markets, and especially the US stock market, is in what we'd have to call a high alert, a danger zone of having a decline. And these declines can be pretty steep. I mean, they're normally like 35, 65%. There are times when it's even more than that. But 35, 65% seems to be the norm. So what does that mean about today's markets? Well, I can go back to daily now. And to look at the daily Dow, um, so far it's bullish, been very bullish since the 3-year cycle bottom that we had there, what, in April of 2000, April of this year, 2025. And it's been pretty much up. And as you mentioned, Johnny, it's making new all-time highs now. Well, you're making new all-time highs as you're entering the time band for not all-time lows, but I would say multi-year cycle lows.
Yeah.
So somewhere in here, we got to have the crest first, followed by the decline. And maybe the decline also correlates with the next 3-year cycle, which you measure from April of 2007. You measure 30 to 42 months, you really get about what? October of 2027
Yeah.
into about October of 2028, which also overlaps this time band that we're talking about. So these are very, very important things coming up. We have to be very, very cautious about being on the long side other than as maybe traders. This is not a time to start entering the stock market for a long-term play. If you enter the stock market, you're going to be thinking that this probably isn't for more than a year. And maybe it's not even, well, it could be any time. This hike can happen anytime, I think, within the next year.
Well, near term, it's pretty interesting, Ray, because we do have stocks hitting new all-time highs this week. The Nasdaq, not quite yet. In the pre-market, we are seeing the Dow and the S&P hit new all-time highs, but we're coming fresh off of Uranus retrograde, Uranus changing
Yeah.
directions. Uranus is the breakout planet. It can be above resistance or below support. You never know what's really going to happen. But I do like the geocosmic backdrop for a break to new highs, and here we are talking about the lateness of these long-term cycles. One of the things that we need to keep in the back of our mind as well is that we can go parabolic before everything comes crashing down, and it
What
can
about that?
be a wild ride, and then everything just comes, the rug gets swept, pulled from underneath, and we get that sharp 35 to 65% decline like you're talking about. So. Yeah. Any other commentary on the Nasdaq or just any other global stock markets that are on your mind?
Well, going back to Dow for a moment here. Okay, so we're just in the first phase, the first 50-week cycle phase, which you often bring out in your reports. And it's just the first primary cycle
Yeah.
of a 50-week cycle phase. And you're going to get probably two or three of these 50-week cycles. More than likely, if the big drop is coming into 2027, 2028, the high will be in this first 50-week cycle, maybe the second 50-week cycle. So you still have time to do exactly what you said, to make a new all-time high. You could even go parabolic here, because let's face it, the leaders of the world don't want to see the stock market crash on their watch.
Right.
But somebody's going to. Somebody's going to have to be on watch when this stock market decline happens. If in fact it happens, I want to point that out too, that we're dealing with probabilities. Historical frequencies lead us to these probabilities. They're not 100%. There was one case, I think, in the whole history of the United States where this type of a pattern didn't have at least a 30% decline. So that's like 12 out of 13. So it's not 100%, but we deal in probabilities. Anything over 80%, we pay attention to. And if we get a setup that says that 80% is liable to happen, then we want to take action. We don't have that setup yet, but it's due. And that's where our analysis is market timers is very valuable. And then when you get into the time band of it, you got to start looking for the chart patterns, which you're an expert at. You got to start looking for momentum indicators. You got to start looking for divergences. These things will show up, and that will be the key to exit a good portion of your long-term portfolio, stand aside, wait for that decline, and then that's the time you want to go in and buy. And that's exactly the type of stuff that we cover in MMTA, the Merriman Market Timing Academy, and our long-term investment retreats, which is coming up in May of next year.
Very good. Very good. Ray, since we have you on, we have to bring up gold. Let's talk about gold. New all-time highs here. We had a little bit of a reversal signal yesterday, but we are back up a little bit this morning, not making new all-time highs. We've been
Yeah.
looking at this intermediate term cycle potentially playing out at some point this year. So is this the final rally that we're seeing right now before a dip buying opportunity? Because I do think that gold can keep making new highs, but I must admit I am looking for a pretty significant pullback that I would be getting ready to buy.
Well, here's the thing I think that most people miss. They seem to think there's got to be a fundamental reason, a sudden announcement that causes gold, silver to fall. There doesn't. It
Yeah.
can be just a normal market function where you got too many people long. The commitment traders reports are screaming way overbought bullish sentiment. So what does that mean? That means there's at some point people are going to start taking profits. And when they start taking profits, then all those people who've entered the market with their stop losses begin to be hit. And a domino-like effect happens. Everybody, once it starts hitting one stop loss and another stop loss, the market tumbles and people can't figure out why. And they bail, which just exasperates it even more. So yes, I think there is going to be one of these um, dramatic declines of maybe $400 to $700 in gold before the end of the year. Whether the high is right here or there's going to be a little pullback and then another push up, which I think is going to be the case because we're entering our very important Mars and Scorpio period,
Yeah.
which has historical correlations with big rallies in gold, which we're going to talk about in our webinar next week, and you're going to talk about these things in the week that follows that with Cryptodamus. But in any event, I think you're trying to form a top here. I'd like to see a little pullback. I'd like to see one more push up that may or may not make a new high with some kind of divergence, sometime in the next month or so. And then I think you're going to get this 400 to 700 point decline yet before the year is over.
Do you think silver can make a new all-time high before that happens, Ray? Because that's the big question on my mind. You're pretty close to it, but we haven't made a new
Yeah.
all-time high in silver since 2011.
My experience is when markets get this close to an all-time high, they make it, especially on a third or especially if it's more than three times. W.D. Gann used to talk about three thrusts down. If it holds, it's a buy signal. If it breaks, it's a problem. Well, this is a third time that silver has been approaching $50. I think it's going to break it at some point in the next year, maybe even in the next month.
Yeah.
Uh, but also, just like gold, I think there's a pretty good decline coming where silver is going to drop. I would say at least $6,
Yeah.
maybe more. If gold drops $400 to $700, and I would think that the silver is going to drop more than $6, but it's not unprecedented that gold or silver, kind of collapse. They plunge more steeply than the other. And that gold silver ratio is way, way high, even now. So it wouldn't surprise me to see gold fall more and narrow that gold silver ratio quite a bit. And again, this will all happen, I think, by the end of December. But whether or not silver makes a new high by then or after that low and then it has another rally up, I'm not sure just yet. But I do think it'll break $50.
Very good. Very good. Thank you for that. Last and certainly not least, let's talk about crypto. Big rally coming out today after that rather low inflation report. So Bitcoin, I think, is coming off of a major cycle bottom. Ethereum as well. Ethereum's captured a lot of headlines. Actually, the best performing asset coming out of that low from April. So a lot of exciting things happening in the crypto space. And, with what we're looking at here, even though things look nice and rosy for now, we're actually looking for a top of importance potentially by the end of the year. So what's on your radar with that?
The same as you. You and I are very compatible, very similar in our outlook here. Um, we have in our methodology, we look for the primary cycle to have three phases. And as you just pointed out, we finished a major, which is a one-third phase. We finished a second one-third phase. What is that? Maybe 3 weeks ago or something?
Yeah, about a week and a half ago. Yeah.
Well, yeah, that's right. It was around September 1st,
Yeah.
August
Yeah.
29th, September 1st period. We had that bottom. So it's in the beginning phases. Whenever you're in beginning phase of cycle, it's bullish. And we've also got this halving cycle that Jeremy Osting from MMA2 student research showed us that 16 to 18 months after the halving, you do tend to get an important long-term cycle high in Bitcoin. Well, that was April of 2024. So 16 to 18 months after that is August to October. So we're in the time band. We're in the last phase of a primary cycle and we're just beginning it. So I think if we're going to push to new highs, it's going to happen here quickly, maybe in the next month. In fact, it's already started. The question is, will it make a new high or is it going to make some kind of more like a head and shoulders pattern where you get maybe a retest of the high here and then you break down. I think you can make a new high, and I think you make a new high because of all the geocosmic signatures that are coming up with Mars and Scorpio. I especially am focused on that solar eclipse new moon on September 22nd. Okay, I think you're focused on it too. That's a very important Saros cycle between the lunar and the solar eclipse, as identified recently in a column called The Dragon Hole by Adam Sumner of England. He pointed out the last time this series of Saros eclipse happened was August of 1971. That is when Richard Nixon took the US dollar off the gold standard. And look what's happening now. Gold is again very, very much in the news. So I think today's gold is digital gold is like Bitcoin. So uh, something's going to be announced here. I think in the next 2 months involving Bitcoin. Unfortunately, in the past, when you get these 4-year cycle tops, the announcements that affect Bitcoin and cause these big declines over the next year are usually have to do with some kind of corruption,
Yeah.
something going underneath, some kind of hacking going on, some kind of theft going on. So unlike gold, where I don't see a fundamental reason for it to come down, with Bitcoin, we have a history of fundamental reasons that arise that drop it. And so we want to be careful of one of the major exchanges maybe make an announcement of something of this nature. The last time it happened was FTX,
Yeah.
Sam Bankman-Fried. So you got that type of announcement, that type of an event possibly coming up again, as it has just about every 4 years when Bitcoin rises from its high and falls apart. And I don't think that announcement's coming up actually in September, October, November. I think that's the top. You get a decline to a primary bottom by the end of the year. You get another rally that doesn't make a new high. And it's after that, sometime next year, that we have to watch for these announcements of unethical, illegal, scandalous activity going on with the Bitcoin market. Yeah.
Very good. And so, here we are a few days away from your webinar on Sunday, Ray. We only touched the surface on a few markets, but is there anything else you're going to be covering on Sunday that our viewers should know about?
I'm going to be covering Bitcoin. That's going to be my first topic. That'll probably last 20 to 30 minutes. Then I'm going to go in the gold market. I'll repeat some of the things I said here, but I'm going to give you the data that backs it up. I'm going to bring Wyatt Fellows in, the MMA gold analyst who just completed a remarkable study. It actually replicated a study that I did um, with Mars and Scorpio, Mars and Libra and Scorpio. He refined it, he brought it up to date, and the findings are, I mean, they're awesome. They're stunning. And he's going to share that, which kind of validates the timing of why we're looking for a high here in gold and a big decline in another rally. So he's going to give you the time bands that correlate with the low in the next week or so, preceding a rally that correlates in the next 1 to 2 months, followed by this big decline. And then we'll go over silver too. So that's what's coming up on Sunday.
Okay, well, it is a busy week here at MMA because early next week we have the monthly cycles report coming out as well. And then in about 2 weeks, we're going to be starting the 4th edition of the Merriman Market Timing Academy. So we have less than 10 spots left, Ray. We've had a lot of interest this time around. We have an amazing group of students joining us this time. I'm very excited about. And so any final words that you could share with us on MMTA, which starts in a couple of weeks?
Well, I'm excited about it too. We got a great faculty. Usually it's just you and me in the past. Now we have Vivka being the main instructor, and she's got a nice faculty of, I think, 6, 7, maybe as many as 10 between mentors and faculty members to help students through the next 2-year program. As you said, we accept 50 new people. We got about 40 so far, and we got about 30 people that are, on the edge right now. So it really comes down to those last 10 slots, and usually those slots get filled um, as you go into this event. And this event will start in 2 weeks, September 27th. It's a 2-year program. You go 6 to 8 weeks every Saturday, followed by a research report if you want to do research. and followed by a test. If you want to, get a certificate, you got to pass the test. You have to do the research reports, but not everybody wants to do that. They just want the material. So we go 6 to 8 weeks, take a month break. We do that for 4 courses, and then we have a summer break from June, July, August. Start up year two in September and go again till May. So it does involve a time commitment. Um, it does involve time commitment, not only in terms of the seasons, how much time you have to be committed to this, but every week, if you're gonna get that certificate of completion, you got to expect to spend probably 4 to 6, maybe 7 hours a week in study, getting ready for it. And the research program is probably another 10 hours, but you have a month to do that. So it's a vigorous program. Uh, it's not simple. I mean, trading is not simple. Analysis is not simple. I mean, you read a lot of the things through social media as if this one factor that this person has discovered is all that it takes to know. No, it's not that simple. Trading, being successful as a trader, as an investor, is complicated. But we, I think, can put together an excellent organizational method of analyzing where you have your priorities. These are the things that lead you to take that trade, to make that investment. And when they're in effect, you either then it's up to you. We get you to the party, but you got to make the decision. It's up to you to execute it. And you either execute it when all the criteria are in effect, or you miss the opportunity.
Yeah.
Okay. And that can be just as painful as making a bad decision prematurely or waiting too long. So it's important to know what the criteria are for the setup. It's important to know the emphasis on you, the responsibility on you to make the decision and not miss the opportunity. And then the final step to success is managing your risk. It takes 2 years to understand all of those dynamics and put them together into an organizational, understandable, comprehensible, usable execution. And that's what we provide for you. So hopefully some of you listening to this will be interested and will contact Gianni, who is the registration director, and join us with one of those 10 slots that are left.
Very good. And 2 years, it's not a coincidence, right? We are rewiring your confidence level, rewiring one's ego to be able to tackle the markets. It's a Mars cycle. So, it's
Ah,
very, very
excellent.
important as well. So, Ray, thank you so much for joining me today. It had been way too long. I'm glad to have you back on the program, and we'll have you back again soon, once again. So, any final words before we wrap it up?
Gianni, you're doing a remarkable job. I'm really proud of the work you're doing. I'm glad that we have such a connection that's been going on for what, 10 years now?
Yeah, yeah, yeah.
It's been a very fulfilling, rewarding experience for me, and I've really enjoyed working with you. So thank you for what you're doing. Keep up the good work, and I'll be there to support you.
Thanks, Ray. We'll talk soon.
Okay.